Good morning, everyone. It's Monday, October 24th. Hopefully, you had a great weekend. Anyways, we're going to jump into the morning charts here and start off with the US dollar index. Now, here we've got the 60-minute chart, and I am zoomed out a couple months here. If I zoom out just a little bit more, you'll be able to see that the recent price action in the dollar index, we've had a nice sell off. We had a bit of a bounce there. It looked as though the US dollar was going to try and form a base. At this time, it continues to move down, and we are coming down more and more into a pretty key support zone where there's some previous pivot highs and pivot lows. And we actually did come right down to this key level on Friday. So you can see here we've got a pivot high, pivot high, pivot high, pivot high, pivot low, and now we've got the US dollar selling down to this level. We'll see if we can get a bounce. Maybe the market actually, the US dollar starts to form a base here, and this is still at the top of the base, but it takes a little longer to play out before we see a little bit of a drift back up. I would anticipate to the 78.25, 78.50 area. If we get that, we're going to get a pullback, a multi-day pullback in equities and commodities, and then after that, I have a feeling the US dollar could end up falling sharply lower, and of course that will put a bottom in the equities and commodities market. But again, really, we can't really look forward that far with all the headline news coming out, what's happening in Europe. This whole story can change in a blink of an eye, and we're just going to take it one day at a time, because really nobody can predict or forecast what's going on, going to happen in Europe. So that's kind of where we stand. I'm hoping the US dollar puts a base in here, but really we don't have a clue of what's going to happen in the UK. So that's the big wild card right now. Now, looking at the crude oil chart, this is a 4-hour chart of crude oil going back several months. You can see the overall trend is down, and more or less what we saw last week, we saw a nice move right up here into key resistance, and there was a nice rising wedge, and we ended up taking a short position right up here right when we hit this high, and we got a nice pullback within 2 days. We got a 7.5% move in 2 days with our ETF. We ended up covering right down here at the low, because it was a key support zone where we had a major pivot high and a previous pivot low, and from there on we saw the market crude oil bounce back up to the highs. Now, it does look as though the crude oil is trying to maybe top out here and could end up heading quite a bit lower, but really I didn't want to hold into the weekend, and we hit our first profit target, and we saw a pretty strong recovery the next day with some solid volume. So I didn't want to hold our position. I'd rather get out and lock our money in and wait for another setup. So for all we know, we could actually be going short again crude oil this week, but I'm not jumping the gun. I'm not really that comfortable doing it right now. I like the first test of a key resistance zone. You usually get a sharp pullback, which is what we got, and right now it's kind of back into neutral territory in my opinion, so I'm just going to hold off there. Now, looking at the gold chart, here is the 4-hour chart of gold. This zooms back several months. You can see the main kind of price action here. If I was to just box it in, we've got the previous major consolidation that we had back here. You can see we had a nice big run up, sharp sell off, took a couple months to regroup, and then finally broke out of it and expanded and ran up. Now, our pullback brought us right back on top of that major support zone. We've been continuing to bounce on that level, and I pointed out a while ago that we're probably going to see the US dollar, or sorry, gold, stay within this range that it created, this more or less these pivot highs and this spike low that it had. So right now we're trading in the upper range. Overall, the pattern looks still bearish in my opinion. It's starting to drag out a little longer, so it could be starting to form a base here as opposed to a consolidation. But right now, if we were to just quickly zoom in on this, you'll be able to see a little bit more of a bearish pattern on it. And what I see here is the rising wedge. And this is what I pointed out a few days ago, saying, it's right at the apex. We're going to see a move. The odds are pointing to the downside. And we ended up getting a nice move to the downside. Right now we're seeing a bounce back up into this resistance zone, and we'll have to just see if we end up seeing gold fall off to put in a double bottom, or possibly slide a little bit lower. And then after that, I would actually be looking to go long crude oil. So right now, overall gold is trading in a range that I think if you just kind of take stabs at it here, it's more of a 50-50 guess now. And really I'm waiting for some type of breakout and pause to either go long and expect it to go up, or a sharp breakdown and possibly a retracement back somewhat, and then we'll be looking to actually short gold if it continues lower. So that's kind of where I stand on gold. Silver is pretty much the same story. I don't want to get involved again with that right now. It is trading more or less between this last pivot high and pivot low, trading sideways. The overall intermediate trend is down over the past couple months. Selling volume is still in control, and we could actually see another big move in either direction in silver. It's pretty much a 50-50. Again, if I was to just quickly put a box over its trading range, you can see we're trading in the kind of upper to middle area, and there's lots of room for it to still move quite a bit higher or lower within this box. So it's really not a great pattern to try and take advantage of, in my opinion. Now moving to bonds, here's the TLT ETF. We have started to see bonds are started to slide last week. They continue to head lower. I've been bearish on bonds for a while, trying to wait for a top to form. More or less, we had a nice spike high. We had another high, and then it pulled back. We did have a pretty good support trend line through here. It did break. We're starting to see price go very choppy, and I really want to see this bond price actually move something like this in this range. We'd be looking to short it. Right now we're seeing it as of Friday start to break down. We'll see what happens in the next couple days. I do think there's good potential for bonds to actually have a pretty big move to the downside, and until then, until I see a good setup, right now in my opinion bonds are oversold. They're kind of just been trading sideways here, taking a breather, and they could go either way still. It could move up. So anyways, I'm neutral on that. As for the SP 500, I pointed this out in last night's report. We more or less have a running correction in my opinion, which means we're seeing prices broaden and continue to move higher. This could end up taking stocks quite a bit higher, or we could see it sharp pretty quickly to the downside. Overall, we're in a similar situation as what we saw right here. We got a big gap up, sells off a little bit, pushes up to a new high into the close. So we do have this gap window here to fill, and the market's overbought. It's at the top of its range. I wouldn't be surprised if we see a move down to fill this gap, or possibly even come back down to this lower range. So I do feel as though we could see stocks pull back today. Now looking at the futures, here are the SP 500 futures, and this is zoomed. This is a 24-hour clock. We're zoomed way out, and what I'm looking for here is we've had a nice run up back here in time, and then we saw consolidation, and then after that, once we saw it become choppy in pre-market, we saw a strong move to the downside, and it continued to show weakness for another 2 sessions. Now where we are now is we've had a nice push up. We've had a consolidation the past day, and now we're starting to see this pretty much same choppiness in pre-market as we saw over here. And of course, if we were to zoom out on the chart, we've got that upper broadening band right up in this area. So I am anticipating that we see probably equities prices drop down into this support zone right onto this level, and of course it'll fill this gap from the close over here to the open over here. So this is where the gap is. So we could see a nice move down today, and then we'll reanalyze and adjust accordingly. Anyways, that's it for now, and I'll talk to you in a little bit. Bye bye.